currency instead of US dollars for its oil sales to China. This would be a huge change.
The two countries are refocusing on a mutual goal, using their own currencies instead of the US dollar.
Is the US dollar's global superiority coming to an end? The Russian currency has recovered substantially from its lows during the invasion of Ukraine. Albeit there is still a significant difference between prices listed in Moscow and those offered offshore. However, in the latest glimmer of hope for the embattled Russian currency, it was reported that commerce denominated in yuan and rubles had increased by 1,067% to almost $4 billion since the start of the Ukrainian conflict. The increase in bilateral commerce should not be surprising, given that both Russian President Vladimir Putin and Chinese President Xi Jinping vowed to do so earlier this year. Does this signal the end of the dollar's supremacy? Do stay with me till the end of the video to learn more about it. Please like the video, share, and subscribe to our channel if you haven't. While worldwide commerce is still primarily conducted in dollars, forecasting the end of the greenback's global supremacy has become a popular long-term prediction in recent years, with luminaries such as Bridgewater Associates founder Ray Dalio among the long-term dollar naysayers. More recently, Twitter co-founder Jack Dorsey, who has become a fixture in the financial news due to his support for Elon Musk's proposed acquisition of the firm, has advocated for the dollar to regain its global reserve currency status. While recent trends suggest that the dollar's share of global commerce has fallen modestly in recent years, and emerging market central banks have lowered the degree of dollar concentration in their foreign reserves, the dollar remains extraordinarily dominant on both measurements. According to the International Monetary Fund, the dollar accounts for around 59% of world reserves, well above the euro's share, 20.5%, and the Japanese yen's portion, 5.8%. To be sure, the dollar's share has declined from about 70% in the late 1990s. Here are a couple of additional data points from the Federal Reserve, which issued a report last autumn that examined the dollar's position in the global financial system in depth. Around 60% of international and foreign currency obligations, principally deposits and loans, are denominated in US dollars, a level of dominance that has been largely consistent since 2000 and is significantly higher than that of euro. The United States dollar is by far the most often used currency in worldwide trade. Between 1999 and 2019, the dollar accounted for 96% of trade invoicing in the Americas, 74% in Asia Pacific, and 79% worldwide. The only exception appears to be Europe, where the euro is the leading trading currency. Growing bilateral commerce helps both Moscow and Beijing. More Russian customers utilizing the yuan will help China's currency internationalization at a time when economic and political ties with Washington are becoming increasingly tense. Meanwhile, Moscow must restore commerce lost due to Western sanctions and voluntary withdrawals from the Russian market. It is also worth mentioning that the dollar is now trading barely below multi-decade highs, with the ICE Dollar Index, which measures the currency's strength against a basket of its main competitors, reaching its highest level since late 2002 earlier this year before retreating somewhat. Currency strategists at investment banks and many other macroeconomic and market specialists, like Ian Bremmer of the Eurasia Group, who rebutted Dorsey's claim in a tweet, have claimed that the most crucial factor sustaining the dollar at the moment is because there is no alternative. Of course, there have been a few other recent threats to the dollar's hegemony, most notably Saudi Arabia's decision to price some oil contracts in Chinese yuan. The yuan-rubble relation is an indication that Russians are increasingly turning to Chinese products to replace blocked Western imports and foreign names that have gone from shop shelves. For China, it is the latest boost to the yuan's internationalization at a time when rising tensions with the United States are delaying the process. According to Yuri Popov, a currency and rate strategist at Sberbank CIB JSC, the main players in the yuan-ruble market are corporations and banks, but there is also a growing interest from retail investors. The volume on the Moscow Exchange's spot market has surged. This is due to sanctions concerns, as well as the intentions of Russia and China to encourage the usage of national currencies in bilateral trade. According to some calculations, 25.91 billion yuan, $3.9 billion, has been swapped for rubles on the Moscow spot market so far in May. This is nearly a twelfth of the volume in February when Russia invaded Ukraine. Stephen Chiu, a strategist, said, "The ruble-yuan trading is bound to go up more on yuan globalization, and the war just accelerated. Russia will trade more in yuan and hold more yuan reserves." According to Chiu, with China due to progressively opening up after a temporary lockup, oil consumption may gradually rise up, and Russia may turn to China to counter any potential European boycott. Yuan-ruble usage should benefit from this. Meanwhile, the dollar-ruble pair's volume fell to its lowest level in a decade, according to its 20-day moving average. Between early March and late May, the ruble gained 118% versus the US dollar. despite the fact that most traders abandoned the pair due to capital limits and forced dollar sales that rendered the market dysfunctional. The major effort of dollar risk reduction. Russia and China's efforts to explore non-dollar deals are part of a larger de-risking approach that is gaining traction in a number of emerging countries. Saudi Arabia intends to price some oil contracts in yuan, while India is investigating a rupee-ruble payment arrangement. According to the International Monetary Fund, global central banks are diversifying reserves, resulting in a reduction in the dollar's share of holdings to 59% in the fourth quarter of 2020, the lowest in 25 years. Russian sanctions for its invasion of Ukraine have revealed China's susceptibility to U.S. intervention. Any geopolitical conflict between them may cut China's economy off from the dollar-dominated financial system, forcing other countries and international investors to sell yuan assets. The goal for Russia is immediate survival. The country relies on China more than the US to keep commerce flowing. The world's second-largest economy accounts for a quarter of all Russian imports, while the United States accounts for less than 11%. Alvin, director of Asia Currency Strategy at RBC Capital Markets in Singapore, said, "Russia has a very weak domestic manufacturing industry. As a result of the sanctions, it will have to rely more on China for machinery and consumer goods. At the same time, discounts on Russian commodity exports are enticing Chinese buyers. Despite recent swings, the dollar remains the most common medium of exchange in the world and the key trading pair for the majority of currencies, including the ruble. Indeed, when Russia's central bank announced last week that it favored a weaker currency, daily ruble-dollar trade resumed to normal levels. Tan of RBC stated, "It is clear that the Central Bank of Russia is concerned about ruble strength. The stronger ruble aggravates the domestic economic downturn by tightening financial conditions, which has a negative impact on Moscow's tax revenues." According to the Bank of Russia's biannual report on financial stability, the yuan share of Russia's currency markets is growing. The yuan share of international trade in China remains minimal, having fallen even lower since the war began. Is the future of the USD in trouble of any kind in the nearest future? Leave your thoughts and questions in the comments section. Also, don't forget to hit that subscribe button and like the video if you found it instructive. Thanks for watching.